Hey everybody, Brian from Bear Bull Traders here. It is January the 7th. And of course, this is the weekend video following our first trading week of the new year. And again, started out with a bit of a bang on, especially on Friday. So let's get down, talk about the price action last week and look ahead and see where we might be going this week. Okay, so let's start out by taking a look at what happened last week here. Of course, the week ended on quite a high note as we had those job reports. Now, a number of jobs came out pretty strong here, above expectations. But I think more importantly, and what the market really focused on, was the increase in wage growth, which is really the driver of inflation. And that came in at 0.3%, which was about half of the expectations. So that was definitely a positive. And then you had the services, the ISM number was also weaker than expected. And so that really lit a fire for the bulls here, and in hopes that the Fed actions that they've been taking so far, raising rates, might be working. And the hikes are going to be slowing down, or even hopefully even stopping in the future. At least that's what the bulls were betting on Friday. So we had quite a nice move in the indexes. And mostly due to Friday's big move, we ended up on all the indexes on the week. And you can see the IWM was the best performer, and Q is still lagging a bit, but also still up on the week. Basic materials was actually pretty strong, along with consumer discretionaries. Not surprising, because when the economy starts to improve, consumers start spending on discretionary materials, so that's why that rose so much. Energy finally dropped down to be one of the lower sectors. It actually notched a little bit of a small loss on the week, but it's been strong over the last couple of weeks, taking a breather there. We'll take a look at that in a minute. The treasuries, they were down, and you can take a look at this, this spread between the tens and the twos, the difference in yield price. It just we haven't seen this level of difference for many years. So that's the spread between the 10 and the 2, which again is an indicator of pending recession, when you get the 10-year much lower than the 2-year in terms of yield. Dollar weakened up primarily on it was on Friday, was a lot of the weakness came in, and ended up but it did end up still up on the week, but just barely. It was well off the high of the week. And Bitcoin seems to have rebounded after it was dropping a little last week, so it's back just under 17,000. So that's kind of how we ended the week. And so before we start looking at some specific charts here, as always, I'd like to do a quick ad for my book on Amazon. There it is, How to Profiting as an Active Trader. And it's money management rules, strategies, and the routines of an active stock, and even some options trading ideas thrown in there. So if you want to check that out, it is there. So let's start looking at some charts here. As always, like to start looking at the treasuries. Again, the treasuries, they do look like they're pricing in for a possible recession. We did have a little bit of a drop on the 2-year. Is sort of hanging in there, but you can see here we had a big drop on the 10-year. So again, those spreads between the 2 and the 10-year seem to be widening even more, which again is sort of giving more of an indication that maybe the bond market thinks that we're in for a recession, whether it be mild or otherwise. So you can see here we have been trading a little bit of a range with the transports, and we did break out on Friday again. Big move on Friday with the jobs numbers and the ISM number that came out showing a bit of weakness. It was a bit of a Goldilocks numbers. And so you can see here the transports finished up on the week after we had 4 weeks pretty much through December of down ticks. So on a weekly basis, we kind of bounced here. Kind of a bit of an area of support here, so you can see logical place for us to bounce. Again, the Dow, we have been sort of trading in a range here, and we did break out on Friday, back up to this prior level of support. Broke through there a little bit as well, so I'll be looking for maybe some follow through next week, but I think there'll be some nervousness coming in to the market as we get closer to those those earnings that are going to be starting on Friday. We've got earnings season coming up, kicking off on Friday. And I think a lot of people keep talking about how this compression in earnings has not been factored into the market. The PE ratios are still too high, which means prices have to come down. But you can see here right now, we are still sort of in a range here with on the weekly, but a nice little bounce there on the Dow. The Qs again faring the worst. Again, maybe a bit of a double bottom here. Again, I'm a little bit concerned about where we're going to go with earnings as we get into earnings season. Again, everybody seems to be warning that the prices are too high for the earnings that we're going to see. That's going to have to, I guess, we're going to have to wait and see if that is the case or not. But nice little breakout of this range on the daily on the Qs. And again, a nice doji on the weekly here. This is a pretty bullish doji where you test a low and then come right back up and go out near the high. So again, positive looking doji, looking good for going into the beginning of the week anyway. The SPY, sort of same comments. Good volume on Friday too, by the way. And you can see here again, seems to be holding this 380 level, goes below it, and then comes right back up. So again, IWM, the small caps, again, we were trading in a bit of a range, have broken out on the daily. And again, these doji candles, which there seems to be some support here, significant support around 170. Volume pretty light on the IWM on the week, although it was a shortened trading week only. We had Monday was the holiday. The VIX, again, the VIX is giving you an indication that there's really no significant fear in the market of a sell-off. You can see here, volatility index, of course, not surprisingly, really sold off on Friday with the market rally. But again, we're not moving back up. We're not even testing highs from early December right now. We're just no fear in the market, which kind of gives you a sense that maybe we are going to continue to go, maybe go higher as we get into the week here. UUP, the dollar index, you can see here, it took a huge, it was coming back up and then took a huge dump on Friday on those weaker than expected sort of economic indicators. So dollar dropped against some of the major currencies, along with the yields on the treasuries, which was probably, they go lockstep, hand in hand here. And on a week, you can see here we were looking like we were going to finish higher, and then Friday came along and big down day on Friday. Bitcoin again just sort of hanging around under this 17,000 level, which seems to be an area where it seems to be gravitating to. So again, we're sort of still stair-stepping down here. We are still in a downtrend, although maybe we are trying to hold this level here, 17,000 for the time being. So let's skip over to some stuff that I'm holding or watching, one of the two. And I'm still in ATVI. I have mentioned this for the last couple of weeks. I've been in ATVI. I'm still looking at this as a possible Microsoft deal is going to go through mid this year. And it seems to be kind of crawling up nicely here. I'm just, like I said, I'm just holding on to it. I have not been able to sell some calls. They're just too thinly traded. I do want to sell some calls up in the 85, 90 range, but very, very thinly traded. So I'm not getting my calls filled yet. CALM, this was a trade I did a couple of weeks ago, or I should say last week when we did the when it really sold off on earnings. Picked some up on this really what I would consider to be an overreaction to earnings, and you can see here it bounced back nicely. We came back up to this level here. This was area of where we broke out from, and then prior support. So I just basically sold the rest of it up here around 57. And good thing I did, because that's exactly where it rejected and pulled back again. But I'll be looking for a possible re-entry here. Friday's action was not great considering the market was up so much and CALM was going in the opposite direction. You never like to see that, but maybe well, I will set my alert around 54, and if it hits there, maybe get back in again. Flex, again, I'm just a longer term hold here. Seems to be good. PE ratio is good. Gold was got into gold here. It just seems to be, everybody seems to be hot on gold right now, or at least a lot of the talking heads are. And I'm in gold now, and it seems to be breaking out of this bit of a wedge that it formed. It broke out here and checked back on Thursday, and then breaking even higher on Friday. And we're doing so on some decent volume too. So really liking that, but it is getting pretty extended here. RCI, I got the rest of this after getting in way back here. Tesla had a nice day on Friday, really sold off hard. I took advantage of this sell-off and mentioned this in the trading room. I sold some 60 puts, so $60 puts. So I'm holding these. I'm short. Essentially, I'm short at $60, but I feel like it's the Tesla's come down from 300 to this almost 100 level. I really feel like the $60 level, if I get put the shares there, if I have to buy the shares at $60, I might even be interested in that at a $60 price. But I sold them thinking I'm never going to have to cover them. They are expiring in March, so there is still some time decay way to go. But I got a pretty decent price for them, $1.40, I think. So as long as Tesla stays sort of above the $100 level, $90 level, I'm still good. And it's already, because of this nice move on Friday, I'm already up about 30% on them. So that's opportunity again. I think overreaction in the market. As you can see here, that's the reason I've got there twice. I'm looking at apparently we've been having a super heat wave in Europe. And especially, and even in North America over on the East Coast, it's been quite warm. So you can see here what that's caused with the natural gas pricing. It's just dropped like a stone. Unfortunately, I wish I'd have been in this trade, but this was a real gift to go be short this. And you can short it with ETFs. You don't necessarily just have to short UNG. You can short it with an ETF like KOLD. But we're getting into a range here where I think we're going to get some support. If it does turn cold again, like it should be, maybe we'll get a bit of a bounce here. But this is an area I'll be watching next week to see if we get some consolidation in this area. Energy, again, we're back up and we're kind of stuck in this trading range. Here's an area where we had prior support. We broke down through it. I got some energy when we were back down at this level, and I'm out of it again right back at this area. So I think we may be chopping in this range. Had a pretty decent day on Friday, although you can see we were well off the highs of the day. So again, not a great week for energy. And that's it, everybody. And wrapping things up, let's take a look at what we got coming down the pipe here this week. As I mentioned, I believe earlier, we do have the start of the earnings seasons kicking off here on Friday. But you can see here where we went out on all the indexes. You can see I've put up some support and resistance levels. Right now we seem to be a little range bound, I've already discussed. And as far as economics events go, Monday at 11 a.m. we've got this Fed inflation expectation number coming out. There are a number of Fed speakers that are going to be talking throughout the week. There are too many to list here, but Powell is one of them. He's speaking in Sweden, I believe, on Tuesday. So could be a market mover. You have to watch out for those events. Thursday, 8:30, we got CPI and jobless claims. That will be quite interesting. And as I mentioned, earnings season is kicking off next week at the end of the week here. You can see where we usually start out with some of the big banks, Bank of America, JPM, Citi, Wells Fargo. We also get Delta Airlines and UNH, United Health. And leading up to it, we do have a few ones that might be watching. Taiwan Semi, KB Homes, this is Albertsons, and then Tilray before the market open on Monday. So that's it. I hope you had had a good week, a good first week of the year, and As always, in the Bear Bull Trading Room, we will be kicking off things again Monday morning, 8 o'clock, engineering the markets with Jared, and then 8:30 our pre-market show, 9 o'clock trading the market open with our members. So hopefully we'll see you all at one of those events. Enjoy the rest of your weekend, everybody. Bye for now.